Hey, good evening traders. It's 8:05 here in the UK and about 55 minutes to market's close or end of day in the US. So we can have a look at some daily setups that are potentially coming in, but there's a few interesting charts. They revolve around the yen pairs because the yen has been heavily sold off. But one chart that we did focus on that hopefully you've seen, and now we've got a trade setup for tonight that we will be taking if it moves according to the way we hope it does. So we'll start with that, which is cable or pound USD. We highlighted the fact when it came into here that we potentially push up. We saw the head and shoulders forming. We've broke out a 132, which we forecasted last week, so any breakout traders could have jumped in on this move. We did also say watch for price to stop at 133. Fantastic. I mean, it was about a pip short. But since then, what can we look for? Well, look, in simple terms, here it is. Let's just move the chart over so you can see it in a little bit more detail. So left shoulder, right shoulder, head down at the bottom. The neckline is just the resistance level in this case where the market has created a previous high, and that lines up. Now then, in this instance, that is a flat level. A head and shoulders can also look something like this, where the neckline is descending or ascending if it's traditional head and shoulders in an upwards moving market. So that would be your flat neckline, and then obviously your other option would be something like this, and that would be your ascending neckline. So that's how we can look at head and shoulders, and then how to confirm a potential break. What we've got here is we've seen the market accelerate, we've seen big candle bodies, the market's come back into our area of interest around the neckline. It's not a precise level, it's just where we've seen the market, where sellers have come into the marketplace, and then as we've broken above that, we've had a big impulsive move. And you can see here the candles steadily started to shrink in size, as did the bodies. Then we have that acceleration back, and then we've seen the shrinkage again, and wicks on the candles. So now what we're looking for is the shift in sentiment and buyers to come back into the marketplace. So a break above the previous H4 candle will give us an extended target of a 5-to-1 up just below 135. We'll be taking money off along the way, with 133 being a key area to definitely take some money off should the market move in that direction. If the market does fail and start to head back down this way, then obviously we can start looking at a potential short and trading back down towards double bottom area. So there's always both sides of the coin to manage and work with our expectations, but as it stands right now, our favored move is to the upside, with orders pending. Now if we head over to dollar yen, we're going to head to the weekly chart. This market has literally just been breaking through every resistance barrier that's been in its way. A lot of that you could say is down to surging yields in the US. We're seeing the yields creating new highs, and therefore that has a negative impact on yen. But also this week we've seen the Bank of Japan come out with a statement saying that they don't like to see accelerated prices, and will react if need be. Strong movements in either direction to appreciate or depreciate a currency can have a negative impact on one's economy. So they might intervene to some extent to bring pricing back to a certain level. So, you know, previously we were looking at a potential reversal from this area here. Look what happened. You can see market just blasted straight through it, another 300 points. You know, some people might say when we look at these areas and we're saying, look here, we're looking for a corrective move and there could be a big potential move. Well, that move could be bigger right now, but resistance levels, when they are broken, you will find that the market is much more likely to have an accelerated move towards its next potential level. So, you know, when we are highlighting areas of interest, we're still looking for other factors to be present before we go ahead and trade. And this is the beauty about trading. You know, just because we highlight and we forecast where the market's going doesn't mean we're automatically going to buy and sell at that point. We need certain points of confluence to actually happen before we can then trade. It's all about having a trading plan and a set of rules. So if you are lacking a trading plan, if you are lacking a set of rules, then please reach out to us, and we'd love to help in any way we can. We've got a fantastic trading community, and right now we're doing a lot of YouTube because it's something that's been asked of us, and so far the feedback's been excellent. And if there's anything that you would like us to produce content on rather than just looking at charts, please let us know, and we'll see if we can accommodate your demands. We're always open to new members, new traders, experienced traders. As long as you have a positive mindset, you're looking to develop, you're looking to help others. We obviously, as a community, we don't like negativity, and that should be banned from all workspaces, no matter what. Now, dollar yen, as I said, is come into a significant area. So let's give you an idea of what I'd be looking for and how we could potentially trade this next move. So as you can see, I mentioned the head and shoulders pattern earlier on cable. Now look what happened. We've got a high, a higher high, higher low. We're seeing that impulsive move. Now look, price could still run on and create a new high, go through that resistance level and keep trending to the upside. If it does, guess what? You keep trading with the trend. But if we want to trade, let's say, against the predominant move is to the upside, we then need to see other factors that will allow us to trade against this strong dollar yen move right now, and that would be something like this. It can either come up and equal this area, it could push through it, I don't mind, but what it would need to do, it would need to break this present low, and then I'd be looking for some kind of corrective formation. It could be a rising channel, ascending channel, whatever you want to call it. It could be a bear flag, it could be a rising wedge, and I'll then just look to trade the market back down into initial areas of, let's say, 118.50, and then obviously it depends how the market moves. And if at any point, let's say it came into this point of structure here and we just then started seeing the market reverse, there's always going to be set profit points along the way, and that's to de-risk, because we never know how the market is going to react. So that's what we're looking for, something like that on dollar yen. Let's move over to don't want to look at Kiwi. Let me just highlight what we're looking at on Kiwi. I think we need to go to the daily chart. So let's just zoom out a little bit so we can highlight what we're looking at and where the market can potentially go to and how we can take advantage of it. So we've got clean resistance, several touches here, potentially going to head straight into this area, but before it goes into there, the reward isn't good enough from where we are right now to just trade it into this area. So Kiwi and Aussie have been very, very strong in their own right, so you want to be looking at trading Kiwi and Aussie against any pairs right now, and specifically against the yen. But obviously you need to look to see where that market is in relation to barriers and whether you can then start taking any trades. So like I said, the reward isn't good enough where it currently sits. So areas to look for would be this short-term trend line that we've got here. You can't see it on this particular time frame, but on a smaller time frame you'll see it. And then we've also got this trend line support here to take into account. So if we drop down to the 4 hour, what we'll see right now is how price has broken through this resistance barrier here. It's created a new high, had a higher low, and we're trying to push on again. Now I'm always going to be looking for an area of confluence, so this area in here looks nice for a potential long opportunity. The only sort of downside I would say to this is it looks a little bit like this area here. It comes down, it pushes a little bit high, and then it breaks and comes back down and tests the longer term trend line. So my preference is I want to see the market come down and test this area to get long, and that will give you a better reward up into around this 0.7050 area. So as it stands, alerts will be set for 69.30, looking for long opportunities in here depending what the market presents us with, but preference would be, like I say, to head back down towards the 68.50 barrier, somewhere down here, to then start looking for those long opportunities. Let's head over to the Nasdaq. So the Nasdaq, we highlighted yesterday, or I should say Nolan highlighted yesterday, that after such a significant daily candle and an impulsive move that we saw when I sent out the video originally to be looking for longs from 13,000, we've done 1,600 pips in a straight line. Significant support level here at around 14,400. Now this is where we really want to see if buyers can come back in. And if I just zoom in, let's just highlight why it's significant. Look here, this when we had this ABCD correction back into the same price point, and then again here we had that dead cat bounce, price came back, tested again, and then moved down, and then it's rallied back into that point. This is the first time we've got back above it in a while, and now we're retesting. So we really need to see if buyers are going to come back in and be present at this area. So when we drill down on a smaller time frame, I'm on the 15-minute here, you can see we've got a lot of interaction around this price point where price broke through, came back down, and then buzzed back up. Again we tested, again we're testing. Now you'll notice that 14,680 was a significant resistance level that price has failed at several times, and again we've come back down here. So if we are trading from this area, we want to look at exiting at least a good chunk of our position at 14,680. Now there's nothing to tell me to buy it right now because we've got a massive selling candle. That could be an exhaustion candle. It is a 15-minute candle, and we've only got 45 minutes left of the trading day. So as it stands, what I would look for, I would drop down to the 5-minute chart. I want to see something like this, break, and we'll look to trade it long. I need to see price fail. We've got a good level here, so I want to see price fail. Even if it comes back up into this area here, it has, let's just undo that and start again. So price comes down, let's say we have a rally up into 14.5, we come back down to 14.450, we come back, and then I'll be looking for price to roll back down into this area and look to try and grab a nice 100 points plus back up into that zone there. So that's looking quite tasty. And then where else shall we look at? Kiwi Yen, I think. Kiwi Yen, and then we'll call it a day on today's charts. So Kiwi Yen, let's go up to the weekly time frame because we really need to zoom out a little bit here so we can see the bigger picture. Now the bigger picture, we can see this price point here at, what is it, 84 flat. I didn't put in the arrows in on this level here because we've sent this out in our watch list to our members, but I didn't put the arrows in because the data just squeezes up too much. You can get enough from where we currently sit. You can see that this is a significant level on this chart at any point, stretching all the way back to 2013. We've got some significant moves when price tests it. We go back down to 75, back down to 75, and then, you know, we get to see what happens. But this is the first time price has gone above it. Now I don't mind price being above it because this could be a little bit of a false break to catch people on the wrong side of such a strong level. And then when we couple that with the confluence of price testing this resistance trend line multiple times, we just need to see sellers come back in and actively push price back below 84. When they do that, then I'll be looking for the next corrective pattern to trade. So as it stands right now, let me just move this over. I've gone down to the 4-hour. Now it could be a double top forming, I don't know. We do have a little bit of divergence here on stochastics. If you are interested, the settings on there was 833. It's not something I use a lot, but you know, if we are looking at any sort of corrections, corrective patterns from significant levels, then these are things that I'm interested in. And you know, the other thing to take note of here is, look at this, on our strength index, New Zealand is at 5, so it's the second highest score. Yen is at -7, the weakest score. So a reversal will only occur when you have the weakest currency. All of a sudden buyers start to come in and overpowers the strongest. So a reversal is effectively that. You know, trend is buy strong, sell weak, and a reversal is buy weak, sell strong. It's that simple. So using our in-house custom built indicator, we can see where these are on any time frame at any time. So if we go to the daily chart, these meter readings will change, and you'll see Kiwi is again the second strongest. You'll see Yen is the weakest. If we then change to Let me just get the drawing tool off, change to the weekly chart. Let's have a look, see what happens to the meter readings. Again, Kiwi is the second strongest, Yen is the weakest. If we change to the monthly chart, Yen stays the weakest, and Kiwi is now the third strongest. So this is it's a really good indicator and confluence to start looking for potential reversals. Basically the market's overcooked a little bit. Now, I'm not just going to sell because of that, and yes, price is at resistance. I want to see price break down through this zone here. We get through here, then we've had a change in cycle, we've had a false break above 84, we've rejected the trend line, got lots of confluence coming in, and we'll just look to try and trade this back down here, whether it goes to 79, 75, whatever it may be. It'll be fantastic rewards should that happen. So that's our final chart for today. I do want to ask you, please remember guys, we're getting lots of views at the minute, but it really does mean a lot if you just hit that like, share and subscribe. Subscribe just means it's any videos we publish, it's going to come straight to your inbox without having to search for any other videos. And hit the like button if you like our content, and if you've got any traders that you think might enjoy our content, please share it with them or post it on your social media, anything like that. Any support we really do appreciate. So thanks guys, have a great night, and we look forward to seeing you in tomorrow's video. Bye bye.